Welcome back to my market review series where I share my trade plans and my trade management as well as my trade recaps. So, in this video, I'll be going through Canadian dollar against the Japanese yen, and I'm taking up from the previous video where I forecasted this trade plan. So, as can be seen on the screen, the trade plan was triggered and our bias is currently playing out. So, the chart is as was in the previous video. However, I was triggered a bit lower and I'll show you how later. I'll start by going through some important zones in this particular price chart. So we had a sweep of liquidity on this point of interest, then a sell-off, and I was waiting for price to um, buy into this particular zone, which is a fair value gap on the daily time frame, as well as 4-hour origin of the breakup structure. So for details on that, the link is in the description for the previous video. At the time of the making of the previous video, the price was at this point right here, which is exactly 28 days ago. So since the trade plan and between the publishing of the trade plan and the triggering of the actual trade plan, it's about 28, not 24 days. Yeah. So it required a lot of patience. However, it's currently paying off. So price sold off, but had a slow grind back to our zone, and I was triggered into the market. And so far, um, it's prudent to have taken some profits off the table. That is, we've already hit a risk to reward ratio of 1 is to about, let's confirm, 1 is to 4. So a 1 is to 3 RR would have been a prudent TP1. Uh, the next take profit level I'm interested in is this, and then finally our daily order block. So given that the price took a bit long to get to our zone, I did not have my limit orders rested at this particular zone. So what I waited for is for price to play into our zone, then give me a breakup structure entry trigger. And this is how it looks like. So I'll hide this tool first. And so on the internal structure, which is the 15 minutes, we saw this particular uptrend for a while leading into our zone, and we have the typical lower higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So this being the final low that led into my zone was a very important level for me, because only when it actually breached to the downside is when I'd be uh, triggering into the market for a short, because that would be a confirmation that the price is about to reverse. And let me clear the charts first. So as you can see, this particular low was breached right here. So this was our particular point where price was the market structure was broken. So this zone is important because it's a confirmation that price is about to reverse, having come from my point of interest. So the typical limit orders would be set at the origin of the move that led to our breakup structure, which is right there. So should have had our limit orders there for a sell. Then the stop loss slightly above the origin, and our target all the way here at our daily order block. So far, the traders played out 1 is to 9R. It would be prudent to have taken some off the table. And now we wait to see if it will play out all the way through. So that was just an update. For the initial plan of this particular trade, the link is in the description. And join my Telegram channel where I do post my exact trades when I'm stopped out, when I'm in drawdown, how I manage my trades, my entries, my exits, and I also answer questions and analyze charts for members. So that's that.